Analyzing a company is crucial to your investing experience, simply because it allows you to take a closer look at the stocks you're planning on purchasing. It's a vital step to your investment journey, and every investor must learn them in order to be successful in the market. If you're new to the idea of investing, then it might sound a little daunting as you're not sure how to properly analyze a company yet. But don't worry, because we're here to provide you with a helpful guide along with tips to effectively research a company. It's important to know that when starting out on investing, it will all seem a little scary at first as well as confusing, so it's normal to feel like you have no idea what you're doing. What you need to focus on is keeping your mind open to the experience and allow it to teach you things. Hey, welcome to Stock Market Mate. Today we'll walk you through 8 steps that you need to master in order to look for a great company to invest in. We will be explaining them to you, as well as provide tips to help you understand and apply them yourself to get better at investing. Before we get into it, subscribe to the channel and hit that notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. The key to being able to effectively analyze a company is to understand that company's business. You need to give it a lot of thought and consideration. To do that, we've recognized 8 steps that you need to take note of to really dive into a company's background. Step 1. Look through a company's business description. Say you have a company in mind already. What you need to do first is to draw up that company's most recent annual report, which is also called a 10K. If you don't know what an annual report is, it's a document containing information about financial performance filed by public companies each year. In it, you will be able to see the company's business description under one of their sections. So whenever you want to analyze a company, you should start by looking through their business description. There you'll be able to find out a company's segments, what they do, and how they do what they do, etc. When searching a company, this is the part where you decide whether you want to learn more about a certain company or if you want to find others instead. Upon completing this section, if you feel that you're not interested in the industry or the company, then you can just skip ahead to the next company you want to learn about. Keep in mind that you don't need a lot of investments to succeed in the market, you just need a few great ones. Think quality versus quantity. Be particular and choosy with the company you want to put your money in because it's going to affect how you will do in the stock market as soon as you invest in them. Step 2. Read about the company's most recent MDNA. Great, so you're done with step 1 and you think you know a little more about the company you have in mind. But now we move on to the next step. The next thing you're going to do is to read about the company's recent management discussion and analysis, or MDA. Remember to read from their most recent filing, such as their quarterly and annual filings. This is usually where the MDNA is compiled. In the MDNA section, you're going to read a lot about the business management, what their plans are, and just the business overview in general. Additionally, the company will probably break down the financial performance for each segment there. Basically, it's going to have information such as performance data for the company as a whole. Step 3. Analyzing the financial statements. Now we're ready to proceed to the third step, which is the part where you read through the company's financial statements. Financial statements are reports that detail the business activities of a company as well as their financial performance. If you're not familiar with reading financial statements, then we suggest you learn more about reading financial statements first before moving on to this step. A really helpful guide that you can check out is a book called Warren and the Interpretation of Financial Statements by Mary Buffett and David Clear. It contains simple and easy to understand instructions and explanations regarding analyzing financial statements. It's also not that long, so you'll probably finish it in no time. If you're done with that, then you can now start looking through the company's financial statements. But before that, make sure to take a look at the latest quarterly reports. Footnotes are provided in these financial statements and can be helpful in understanding the figures. Usually, the footnotes will explain what a particular company does differently with specific line items. Step 4. Acquire company presentations and their most recent earnings calls. Step 2 until Step 4 can actually be done all at once as they are interdependent, which means, most of the time, these things, the MDNA, financial statements, and the company earnings calls and presentations often say the same things. Therefore, you can go through them all at the same time and do your research thoroughly. However, at this point, we haven't been able to actually value the company that we're eyeing. In the first 4 steps, we've spent so far getting to know the firm and also learning what they do and how they earn money. Now it's time for us to weigh the company's value, which brings us to the next step. Step 5. Finding competitors. In this next step, what you're going to be doing is searching for competitors of your selected company. To identify competitors is to know what your selected company lacks. You need at least 2 to 3 competitors to weigh them side by side. As you already know your selected company, you've looked through their background, their business plans, etc. It'll be easier for you to know what you're going to look for in the other 2 companies. Read a bit about each competitor and glean information about their plans and growth rate. This will reveal that a company may have a competitive advantage over another based on differences in their margins. Once you find that, you can either decide to stick with your original selected company or switch to the one you think is best for you. Whatever you choose, it's time to go on to the next step. Step 6. Determining the company fair value. Moving on to the sixth step, here we're going to finally value our selected company. There are several valuation methods that you can try. You have the enterprise value, EBITDA, discounted cash flows, and more. Whichever you choose, over time the more you keep on valuing and researching a company, you will get better at choosing the right valuation method suited for you. The step is also an opportunity to examine how your selected company compares to its competitors. This can be done through a comparison of ratios or similar data. You can also consult an analyst researcher's perspective on which type of valuation method is best for you, as they specialize in this area. Step 7. Identify what drives the stock. This step is necessary to see where the stock is at the moment. Is it dropping or moving higher? We also need to identify what was happening to that company at that particular time to find out what moves the stock. In general, you can determine what is driving the stock based on its big movements as well as what caused it to move. Earnings are often behind this, but there are times when something more is involved. Step 8. Look out for a great opportunity to purchase. For this last step, all you need to do is wait for the perfect time to buy. Now that you know what your selected company does as well as their plans, it is time to determine what your individual margin of safety is. We'll want to ensure a large margin of safety if you like the company, but perhaps you see that there's quite a bit of risk involved. When we think the risk is greater, we probably don't want to get involved just yet. In the end, if we like a company, we can simply buy it, but perhaps it's better to wait for the right time for you to purchase. Ultimately, as you continue to analyze company after company when you finally purchased one, you're going to get a lot better at selecting companies and making the right choice for your investment. Just be cautious and wise about what you're putting your money into. Well, that's about it for today's video. If you found this video helpful, kindly click the like and subscribe button. Also, you might want to leave a comment below. We love hearing from you. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these two videos right here. Enjoy!